Good morning and welcome to IGTV's early morning call. I'm Angeline Ong and you are on IG Live on Tuesday, the 21st of March 2023. Now, coming up on today's program, equity markets are poised for a modest rebound. Also looking at the Australian dollar, which has fallen. Is this the end of the tightening cycle in Australia? And Nike is out with Q3 earnings. Watch out for what it says about excess inventories. More on that in a moment. First, let's check in on the volatility markets because it's been such a roller coaster ride recently due to the unfolding banking crisis and also that surprise deal by UBS to buy Credit Suisse. However, much of that has now calmed down. And as you can see there, it's also being mirrored by the volatility index, which has fallen from the great high seen up there to around 24. Now, with 30 minutes to go until the European market open, let's have a look at how the indices are doing on our platform. FTSE there indicated at open slightly higher. This is after that roller coaster session, which saw sharp early losses in the day on Monday, and then banking stocks rebounding essentially from 3-month lows. This selling, of course, was triggered initially by UBS's buying Credit Suisse, which then shocked the markets. Here's a look at the DAX, similar profile there, as you can see. And also let's check on the France 40 on the platform. As you can see there, a similar trend. Now, overnight in Asia, we're seeing this calming as well, working its way through the region where stocks scraped off lows, which were hit in the previous session, but they have all settled higher, as you can see there. The Singapore index, the Hang Seng in Hong Kong, and the ASX all settling higher, almost 1%. Wall Street closed higher as well on Monday after a rollercoaster ride. This is even though Credit Suisse's US-listed shares fell some 53%. That was largely expected, though. The Dow Jones closed up 1.2%, S&P up almost 1%. The Nasdaq closed up ever so slightly. Now, this is all as markets calmed and hope that measures taken by central banks, taken by many of the banks out there, and also by regulators have effectively cauterized concerns about global banking stability. We're looking at Wall Street indicating a slightly higher open as we count down to the opening bell. Now, have we come to the end of the tightening cycle in Australia? That is the question. At its March meeting, the Reserve Bank of Australia raised the cash rate by 25 basis points to 3.6%, meeting market consensus. But the minutes show that the board members agreed to consider pausing in April to, quote, allow time to reassess the outlook of the economy. And this is even before the recent global banking system turmoil. The minutes did not rule out any further tightening. Inflation, of course, remains too high and the labour market still too hot. But not many out there believe that the RBA will resume tightening anytime soon. Indeed, not only do traders have they priced out any chance of a further hike in the cash rate, but there is even a slim risk of a cut at the April 4th meeting. Just a couple of weeks ago, rates were seen peaking at 4.1%. Just want to pull up the Australian dollar for you right now against the dollar. Now, this chart is showing a slight leveling off at the 6,600 point, and it's heading upwards to 6,691. And if it breaks through the 6,750 level, the next resistance point is 6,800. We've seen a higher high there, but it remains anyone's guess whether it will continue to float higher. Of course, it depends on what the Fed does as well midweek. Let's take a look at the pound versus the Aussie dollar as well. Now, that cross has been heading higher since around the February mark there, as you can see. However, it has tapered off and is now stuck in that 18,200 area. This too will largely depend on what the Bank of England says about inflation, which is also very high still in the UK, but many economists think that it's now peaked and is slowly coming back down. Of course, if the Aussie is holding back now on its tightening cycle, and if the Bank of England does not follow suit, then we could see sterling continue to gain against the Aussie dollar. Now let's stay with central banks and discuss how Credit Suisse and the unfolding banking crisis has recalibrated monetary policy, and in such a short time. Last Thursday, if you remember, the ECB stuck to its guns, with Christine Lagarde saying that the ECB is going to stick to its commitment to fight inflation. Yet yesterday, she told the European Parliament that the ECB was, quote, ready to stand and respond as necessary to preserve Eurozone stability. Now, this all came after 6 central banks worked together at the weekend to boost liquidity in US dollar swap arrangements. So what will the Fed do now? This is the question. Now, a vast majority still think US central bankers and policymakers will not pause in their fight against inflation. Their number has fallen a tad. 75% of economists see a 25 basis point hike, down from 86% last week. Now let's get across to Germany now, where we've got the ZEW out later this morning. Economists expecting that index to fall to 17.1 in March, ending a 5-month streak of gains, which took it up from a 14-year low of negative 61.9 to a 1-year high of 28.1. Later on in the day, we're expecting existing home sales out of the US. The consensus there for February, 5% month on month. And later on in the day, API crude oil inventories, that's at around 8:30 p.m. Our time. Now, moving on, we've got consumer price index data as well. This is forecast to rise 0.5% in February, month on month. And the year-on-year consensus is for 5.4% after 5.9% the previous month. Core CPI expectations 4.8% year-on-year. Now, Kingfisher has reported a 36.7% fall in operating profit for the full year. This is after a record outcome driven by COVID, the pandemic in the previous year. The results came in broadly in line with expectations, and it also forecasts that earnings will fall further this financial year. Sales were down 2.1% on a like-for-like basis, and its total dividend stays unchanged at 12.4 pence. Besides earnings, a possible joint venture with French DIY chain Mr. Bricolage has been revealed this morning. An agreement could be effective in the second half of this year. Turning to other earnings of note, we also have Nike. Now, Nike's out with Q3 earnings. The expectations that get you across that first, earnings per share 55 cents expected, and sales of $11.47 billion. That's the forecast or the expectation by the market. Now, Nike's performance will very much depend on 2 main factors. Did it manage to clear some of its excess inventories, and at what cost? As we know, discounted items do affect margins. And also, how is the reopening play in China, one of Nike's main markets, playing out there? Of course, China has been quite slow in its reopening, slower than many had expected. And many big brands out there, including Nike, including Nestle, including Unilever, have had to readjust their expectations given the pace of this reopening. Of course, Nike is one to watch, because there's a fun story out there that Nike is likely to announce, or might have announced already, that they're going to stop using kangaroo leather in its shoes. Who would have thought? I never knew that kangaroo leather was even used in shoes. Now let's take a look at commodities. Gold has settled around the 1,980 mark. Let's get gold up for you. Here we are, spot gold trading around 1975 on the pro real-time charts here and the IG platform. It is now stabilizing after briefly, as you can see here with this spike rising above the $2,000 mark yesterday for the first time in more than a year. Let's have a look at oil as well, because oil did, like gold, react to the unfolding banking crisis. Obviously, if the concern was that if the banking crisis then led to a recession, that would impact oil, because it would dampen demand for energy. As you can see here, US crude stabilizing as well in the last few hours at around $67 a barrel after falling as low as around 64 in the previous session. And that's it for now. Do tune in for more updates on how this banking crisis is stabilizing. We'll have charting at 10:30, and also tune in for the look ahead later on in the day with me at 4:30 UK time. Until then, thanks for watching IGTV.